Hello, I am Eric Merritt from HomeSmart Realty, and I am with Eddie Cristerna at Barrett Financial Group with the Eddie Cristerna team. And we are here to talk about down payment assistance grants and loans. So I'm going to ask 8 different questions, and then Eddie will answer them. And so a lot of you need to know the answers to these questions because it'll help determine if a down payment assistance grant could be good for you. So first question is, when should a buyer look into a down payment assistance grant, meaning a loan with no money down?
All right, thanks, Eric. So once again, like Eric was saying, I'm Eddie Cristerna with Barrett Financial Group. I'm a wholesale independent broker. And when talking about down payment assistance and no money down, so there is a need sometimes for that. And so what I like to go over is, having both options, whether you put your own down payment or you go into one of these programs that offer the down payment assistance. So on the wholesale side of the business, the program that we have actually is a 100% financing program, which is a little bit different. So there's a first mortgage and a second mortgage, but when you look at the combined payment, it's still going to be cheaper than some of the programs that are out there. So that's what we like to do is go over options, and that's one of the options we have is the first and second, the payment's going to be a little bit lower.
Question number 2 are what are the current interest rates, assuming someone has a 640 to 660 credit score for qualifying for a DPA versus a normal FHA loan?
So for us being on the wholesale side of the business, our rates are going to be a little bit different than what we are compared to like a retail outfit that are out there, like the banks or different retail lenders out there. So what that means is we get lower interest rates. And so I did a scenario for Eric earlier today, and for an FHA loan, putting your own down payment at 3.5%, you're looking at about 3.25% on the interest rate. Now, if you went ahead and got one of the down payment assistance programs that we have access to, that's going to be right around 4.25%. So it's about 1% lower if you put your own down payment. But if you don't have a down payment, you're looking at about 1% higher at 4.25%.
Question number 3. There are down payment assistance grants out there that are forgivable and some that are not. So can you explain that?
Yeah, so they're the most popular program out on the retail side of the business, which I came from retail a few years ago, so I'm very familiar with the product. Their product actually requires you to pay it back after 3 or before 3 years. So if you don't stay in the house 3 years, and there is sometimes a portion of the down payment assistance you have to pay back. Now, the programs that we have access to do not require any type of repayment of the money within 3 years. So you can always sell it, refinance it, and you're not going to get penalized from that. So that's one of the big differences that we have when it comes to the program that we have. Like I said, there's no restrictions on income. There's no penalties if you sell or refinance in 3 years.
So I had something that happened to they were buyers, they were renting, and I helped them buy their first house on a DPA on a Chinook product, down payment assistant. They sold 2 years later. They bought their house for $217,500. They sold for $262,000 with $3,000 in seller concession, so it was $259,000 net. So even after they had to pay their whole entire DPA grant back, $7,800, even though they were there for 2 years, which I thought was a little. I mean, it is what it is. They had their rules, so. So even though they had to pay the whole $7,800, which didn't make sense to me, because some DPAs, like if there was a year left in the 3 years, then you should be paying the year that you didn't use, not the full 3 years because you used 2 of those years. So even after all that, after realtor commissions, seller concessions, and then what else? After realtor commissions, seller concessions, and paying back the down payment assistance grant, they still netted $17,000 into their new home that they moved into. And so the closing costs that I got on their new home for $303,000, the lender, which is Eddie, the closing costs were 1% of the purchase price, which is unheard of. I never heard of something like that low. So they actually thought they were going to get $3,500 less, so they actually got $3,500 more at $17,000. So they used that to remodel their newer home for them. It turns out it was an older home, but they're remodeling it to the way they want it. So
Awesome.
that's the example that I wanted to talk about. Question number 4, what are acceptable debt-to-income ratios for a down payment assistance grant?
So the down payment assistance grants or programs we have access to have a max of 50% debt to income. So what that means is with all your income and all your debts that you have, let's say car payment, your credit cards, student loans, any kind of debts you're paying on a monthly basis, they take 50% of whatever you make your gross income, and that's going to be the max. Now, on our standard programs for FHA, we can go up to 57% sometimes. So depending on the credit and where we're at, it's a little bit more flexible when you have your own down payment, but if you don't, and 50% is what normally they're going to look for as far as qualifying. Now, if you're close, there is stuff that we do to help you get under there. We can have you pay something off at closing, which helps you get under the debt to income ratio. So that kind of stuff is all doable, and we go over that when we look at your scenario.
And question number 5, when can you refinance to lower the interest rate and combine the first and the small second mortgage into one loan?
So yeah, that program that we're talking about does have a first and a second. So depending on let's say the equity position, now equity's been going up in the last couple of years here, and if it continues to go up, then basically you don't have to wait that long. You can wait within 1 year, you can do it after 2 years, but there's really no time frame. It's just got to make sense with the equity position because FHA will require certain loan to value to refinance. So it just depends. So there's really no set time frame on that. But we would get in contact with you, or you get in contact with us, and we'll let you know like where you're at and how it looks.
Question number 6, if someone is credit challenged where their score is below a 640, what are some simple things that someone can do to improve their credit score?
So if you're under a 640 and want to get above that to qualify, it all depends on where you're at and all depends on your whole credit picture. A couple of things that we do that are pretty fast to help your credit score is pay down your credit cards to a limit of or a debt to ratio limit, or not should say a limit of 30% of your limit. So let's say if you have a balance of, or you have a credit card with $1,000 limit and you owe $900 on it. Well, you want that balance to be closer to like 300 or less. And when you do that, you're at a 30% utilization, which then gives you 20 to 40 points. So that's one of the things that we look at right away, and we can see if that's going to help, and we will let you know.
And sometimes you can call your lenders, your credit institutions, and have the limits raised so if you do a combination of both, pay it down some and raise your limit, then you'll get your debt to income ratio within 30% or less.
Yep.
Question number 7 is, what are the required documents that you need to get pre-qualified?
So the standard documents to get pre-qualified are going to be 1 month of pay stubs, the last 2 years of your W-2s, and then 1 month of bank statements. Actually, 2 months of bank statements. So we want to see a pattern of having the money in there. Now, for the down payment assistance programs, you don't have to show a lot of money per se in the bank, but it does help to have what's called reserves for the down payment assistance programs. But that's going to be the standard. So 1 month of pay stubs, the last 2 years of W-2s, and then 2 months of bank statements.
And if you're self-employed?
Oh yeah, if you're self-employed, that's a good question. We do get that all the time. It would be the last 2 years of your tax returns.
That shows your income statement. Right?
Yep. Basically, the last 2 years of taxes will show us, what the average is.
Question number 8: are there higher costs to getting a down payment assistant FHA versus a normal FHA loan where someone has their own down payment?
Yeah, it's actually a good question because that's what some people don't understand is when you use the down payment assistance programs, they are a little bit more costly. Like Eric mentioned before, our standard closing costs when you bring your own down payment is roughly right around $3,000. So depending on what price you're at, it could be 1%, it could be less than that, it could be a little bit more. But on the down payment assistance program, there is higher fees and
closing costs.
Yep. So the closing costs go up normally to about $5,000 to $6,000. But typically, what happens in that situation, and Eric's a great negotiator. He's negotiated a bunch of contracts that I've seen, and he's able to help out or maybe ask for the concessions from the seller to pay for those. So there is times like so we utilize Eric to ask for those concessions, and he's very good at doing that.
Well, we hope that this answers all the questions that you have about down payment assistance grants, but if you don't know or if you have more questions, then feel free to call Eddie Cristerna.
Yeah, definitely call me up at 480-734-0784. I do have a team of people to help me out, so it's myself and my production partner Luke. So if I'm not available, the call will go to Luke, and then if he's not available, then I also have other people on the team that answer the call. So typically there's 4 people available to answer the call. If we cannot get to the call for some reason, we're on the phone. Leave us a voicemail, and we definitely will call you back the same day.
Yeah, very nice background.
Yeah, I like that too.
Anyway, thank you very much for your time, Eddie, and I'm glad we were able to do this video.
Yeah,
And we can help you. Down payment assistance grant may not be for everyone, but if you do need it and you don't have it, it's a great way to leverage to get into a home. Because I helped someone do just that. They bought their first home for $217,500, sold it for $262,000, and then helped them buy their second home with 2,700 square feet in a basement for $303,000 in Mesa. So it can happen for you too. Thank you.